calculator. We're going to go through some live rates here today and do a deep dive into the CDFI no income for primary residences loans. Before we do that, though, we'll wait just a few minutes here to get started. Let us go live on all the different platforms. We are streaming on Facebook, YouTube, and LinkedIn here at the same time, so let us get up and running on all the different platforms and give everybody a chance to tune in. We put the comments up there on the screen, so feel free to drop a comment in the chat as you tune in. I see some people were already dropping comments there, so thank you to everybody tuning in nice and early. We'll get started here in just a moment. I see Harriet, Julio, Nicole, Adam tuning in, commenting. Thank you for the comments. Appreciate that. And it looks like we are live on all the different platforms now, so we can go ahead and get it started. I'll take the chat off the screen here and then we'll get into it. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is go through the actual live mortgage rates for some different programs. And then we do a deep dive into a different topic every day. Today's deep dive topic is something we're familiar with here because we specialize in non-QM loans, which is the CDFI no income loans, which is a loan that does not require any personal income from the borrower for a primary residence, which is very unique. So our sales manager, Jose Gonzalez, with 27 years of experience as a loan officer and a realtor, is going to do a deep dive into the CDFI no income loans. But before we do that, we'll do what we do every morning, which is pull up our pricing tool and go through the live mortgage rates. So Nick, let's go ahead and pull up the pricing tool and see what the market is looking like this morning.
All right, let me switch my screen and get started. So as Kyle mentioned, this is our pricing tool for our mortgage professionals. Maybe I gotta zoom out a little bit. I have a different screen today. There, that's probably better. This will show us the general rates and APR, including all the fees. For today, it is August 3rd, just after 11 a.m. Eastern. So all of our basic programs are live. So we'll go through a few different general scenarios. If you'd like a full breakdown of all the fees that go into the APR, an itemized loan estimate, please get with one of our team members. We have over 300 licensed loan officers in 24 states for primary and second homes. And we can do our business purpose DSCR loans in 44 states total. So for all the demos today, we'll set up a same scenario so we can compare across the programs. We'll set a $400,000 loan amount. We'll set the LTV to 80%, 80% loan, 20% down payment. Set the desired price to $299. That means we'll find the best rate at one discount point in cost, which is a typical request. We're going to check out our different programs. We'll start with conforming conventional as we do every day. Then we'll go into FHA, and then we'll check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs using alternative income. We also offer VA and USDA. Remember, VA is only for eligible veterans and active service members. If you do happen to be eligible and are looking for a quote, let us know. We can quote it, no problem. And same with USDA, that's only for properties that are eligible. So if you do happen to be shopping in one of those USDA areas, let us know. We can quote it, no problem. But we'll stick with these top 3 examples for now, as we do every day. We'll start with conforming conventional. We'll do a purchase, 30-year fixed, standard loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO score of 760 and an estimated debt-to-income ratio of 40. So with these basic settings, let's see the rates this morning. So it looks like rates went up yesterday a little bit with the news. 7.25 rate, 0.875 discount points in cost, puts our APR today at 7.413. So a good option here for our customers that qualify for conforming conventional programs. But if our customer for any reason doesn't, let's go back to our tool here, set up the same exact scenario. And typically the next option, if our customer has any trouble qualifying for conventional conforming, is FHA. FHA does allow a little more leniency on credit issues, as well as a much higher debt to income ratio we can use. However, we'll keep everything else exactly the same for this demo. The only thing we've edited is the loan type, so we can compare across the programs. So let's see what the FHA rates are this morning. They're about the same, 6.5 rate, 1 discount point in cost, puts our final APR at 7.092. So just a touch over 7. And remember, the conventional was at 7.4 something. So in this case, if our customer qualifies for both conforming and FHA, we may want to go with an FHA option. So definitely recommend our customers out there qualify for both, check out both. And our customers that must use FHA for the credit or debt to income will be pleasantly surprised with the pricing at this time. Now, where we really love to specialize here at the Mortgage Calculator is if our customer doesn't qualify for either. Many other banks or lenders don't have other options, but that's where we come in, where we have over 5,000 other loan programs under expanded guidelines, where we can use different income types rather than just the full doc 2-year tax return that we have to use for FHA and conventional. So we'll keep everything else exactly the same, but this time we can select a new income option. So again, full docs what we use for conventional and FHA, that's 2 years of tax returns. So we'll typically choose a non-QM option to take advantage of one of these other programs, like our asset related programs, our business bank statement programs, our investor DSCR programs we'll talk about in a minute for investment properties. Our personal bank statement, 12 months, definitely the most popular program by far. So that's what we use for the demo. We also have RSU, stated, VOE, 1099, P&L, and the no income CDFI that Jose is going to be talking about a little bit later. For the demos, though, we always choose our most popular program, the 12-month personal bank statement program, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit their 2 years of tax returns for full doc, may have write-offs and may not qualify, or may not qualify for as much income as they need for the house they really want. So in this case, instead of using tax returns, we simply use their last 12 bank statements, no tax returns involved at all, to determine a debt to income ratio of 40% in this example, using their 12 bank statements, no tax returns, just the cash in the bank statements. So most self-employed borrowers qualify for double or triple the income using those methods. So let's check out the non-QM bank statement options this morning. Best option at the top here, 7.5 rate, 2.625 discount points and cost. So to solve these problems for our borrowers, it does cost a little bit more for these non-QM programs, but they're very comparable here. The final APR at 7.621 is just a touch over conventional. Remember, we just did conventional at 7.4 is what it's pulling at this morning. So we can use alternative income such as bank statements and still get a very comparable rate. So these are very exciting. Also, if you look down here, there's hundreds of different variations of bank statement programs. Some of these at the slightly higher rates may allow things like credit events like foreclosures and bankruptcies, which would otherwise disqualify us from a conventional program. So not only can we use alternative income, we can also get around some of the other issues that may be present with our borrower. So these are great solutions for our borrowers, and we really love to work on these deals. Now, before we pass it off to Jose, we always do live rate for investment properties. So for our final 2 live rates, we always want to do an investment property example. And we'll set up the same LTV, 80% loan to value, 20% down payment. And we will compare our different types of loans for investments. First, we'll do conforming conventional, then expanded guidelines. Those are the only 2 options we have. Because remember, the government programs are not eligible for investments. FHA, VA, and USDA do not apply. So we'll start with conforming conventional. Everything else will stay the same as all our other demos. All we've edited here is the occupancy to investment. So let's see what adjustments the conventional programs have added for investments. That's about the same as it was yesterday here. 7.5 rate for 3.75 discount points in cost. Puts our final APR at 7.758. So a good option here for our customers that qualify for conventional. However, most of our investors ask to typically look at other rate options, higher rates, in order to reduce the discount points. 3.75 discount points in this example is $15,000 that our investor may rather spend elsewhere. So many of our investors would ask for options. Unfortunately, options are conventional, but that's where we love to present our non-QM options. So for the final demo here today, we'll do investment property, we'll do ADLTV as always, and we'll select our expanded guidelines, also known as non-QM. So first we select our income option, and the most popular option for an investment property by far is our DSCR program. That's because it doesn't actually require any employment or income from our borrower. We're simply going to use the estimated rental income from the property to determine a DSCR value. Stands for debt service coverage ratio. If the estimated rents can cover the expenses, the PITIA of the mortgage, that's a ratio of 1.00 or higher, aka the property cash flows on a monthly basis. We also have options for properties that don't quite cash flow on a monthly basis, aka the DSCR ratio is under 1.00. But for the demo today, as we do every day, I will put 1.5, which is the highest value. Therefore, we can see all the different options pop up. Now, the final thing is a prepayment penalty. 3 years is standard for these programs. We can select 0, that will cost more and limit loan programs. And we can select 5, which will save us some money if our borrower wants to keep the property, but again, limit the loan programs. So 3 years, what we always use for the demo, as the most common option. So let's check out the DSCR rates this morning. Again, great option here, 8% rate, 0.975 discount points and costs, puts our final APR at 8.066. So remember the conventional just a second ago was just over 7.75. So here, just a touch over 8, we have a non-QM DSCR program. So with it, it's within about a quarter point of conventional, which is absolutely amazing. Most of our investors, when they compare a conventional quote to a DSCR quote, if they're anywhere in the ballpark of the same price, such as today, I'd say 90% or more of investors will choose a DSCR program. So definitely recommend, if you're an investor out there, check out some of these options. And if we scroll down here, you'll see we have dozens and hundreds of different options here. Some of these may allow things like bankruptcies and foreclosures and other credit events. And some of these at the little higher rates may allow things like short-term rental income to be used. So tons of different options here for our borrowers and our investors. Now, let me go ahead and switch my screen again, and we'll get into our topic for today. So today we're going to be discussing a very unique program. It's actually brand new. I think it was actually created about 2 years ago. But CDFI is a very unique program. It's a designation by the United States Treasury, the United States government, that allows some lenders that we work with to offer loans that would otherwise break the law. So this is a license to break the law, basically. So there's a lot of different ins and outs of the different laws we can get around here with these programs. However, the main gist of it is we don't have to require income, which is the basic Dodd-Frank law that was passed, when we had a lot of trouble in 2008 and beyond, right? So these laws that were created, obviously, were created to protect borrowers, but now the government has designated a new program called a CDFI, certified, I forget what it stands for. I think Jose has it, so I'll let him do that. But it allows them to essentially break the law. So I'll go ahead and let Jose talk about the specifics and exactly how they can break the law, and then we'll go into some example quotes as well. So if you're ready, Jose, go ahead and take over.
Good morning, everybody. Thank you for joining us. Daily Rates Live with the Mortgage Calculator. Great to be with you this morning. The CDFI is a community development program, right? It is meant to foster home ownership for those that would not be able to qualify under the normal channels, similar to all of the Community Reinvestment Act type programs that went on in the late 90s. That's what spurred all of the subprime stuff that went out there. They were trying to foster home ownership on different communities that would not be able to qualify full doc, right? Uh, Now, it does target certain groups that if you're a member of those groups, you will get a interest discount. Usually it's a quarter point. So very good program out there, but it does not discriminate against anyone. So everyone can qualify for. Now, it is meant for primary and second homes, which does add a nice twist to this program because it never verifies employment nor verifies income. However, it is a maximum 80% LTV with a minimum 12 months of reserves at least a 740 credit score or above, with the minimum credit score being a 680, requiring 18 months of reserves. Prior to the pandemic, this program was would go down all the way to a 640, but they've tweaked it, and now it's a minimum of 680 credit score. Uh, Now it does allow for cash out refis, but those are, as you will see in the examples I'm going to show you, at a really restricted loan to value because it's not really meant for cash out refis. It's meant to purchase your home for those people that normally would not be able to do so. So let me get into my first option here, which is going to be for our CDFI purchase of a primary residence with 20% down, 740 credit score. So right here, we're looking at our lowest cost option, which is 10.375% rate with 3.25 points, which translates in our loan amount here to $13,000. So this is as a lender paid option. So yes, it is not an inexpensive program, but it does allow the borrower to qualify for a primary residence or a second home without income verification, which is totally contradicting what the Dodd-Frank Act requires us to do for all qualified mortgages. So this is our 740 or above option, 20% down. So now 720 to 739 is going to require at least 25% down payment and 15 months of reserves at a 10.25% rate at 2.75. No, excuse me, it's
Can
still
you
3.
zoom in a touch, Jose? I
Sure,
think you can make it a touch
sure.
bigger.
Let me make that bigger here. All right. So we're looking at 10.25%. Still the same cost on this one, 3.25, just that the overall points amount is less because our loan amount now drops to 375, which is 75% LTV. Now, our next option is 700 to 719. We are still at 25% down payment, which is good, but our rate increases a little bit, 10.375 at the same cost. Now, our lowest credit plateau is 680 to 699. That's the lowest tier they're going to go. They do not do below 680 any longer. That's 30% down and 10.375% rate. Now we do second homes, and there is no loan level price adjustment for the second home, which is great. So in this case, we have the 10.375 rate costing 13,000, which is 3.25 points at an 80% LTV. This is a very good option. For example, I was able to do one of these on U.S. national living permanently in Colombia, working in Colombia, not filing any income tax returns in the U.S., but plenty of U.S. credit. Wanted to buy a second home for his daughter to go to live in while she went to school in Chicago. Perfect loan. Close that one without a hiccup. Now, cash out, our maximum LTV on the cash out is 50%. Again, I was mentioning this is not a program meant for cash outs, but they do at least give you a lower rate, 9.625, and it is at least 18 months reserves. Cash out proceeds can be used for reserves, but you got to have at least 18 months. And then with the 720, you can still do the 50%. The rate increases to 9.75. At a 700, you can still do the 50%, 9.875%. And you can do 680. I didn't pull that quote up. 680 is going to give you 10% rate at a 50% LTV. So if the house is free and clear, they got a lot of equity, this is a good option for your no employment, no job, cash out refi on a primary second home, or up to an 80% LTV for your primary purchase or second home purchase with at least a 740 credit score.
So I don't see any questions here, Jose, but why don't we go over just real quick? What are the types of borrowers we would use this for? I think people get confused about what we would
Yeah.
use it for. So anybody with income, we would not use it for, right? This is not an option for someone that we can use bank statements or we can use P&L or any of these other options, correct?
Well, primary example, I'm going to give you one, was a really successful recent closing that we had. We had a high level executive um, who was going through a purchase of his company. He was given his income was mainly in stock options, so he really wasn't able to quantify the income. Uh, but his wife had amazing credit, and also, they did not want to sell their current primary. They were going to keep the primary, fix it up, and sell it later. The house they were buying was substantially bigger, so there was no issue with considering the new home their primary. But we couldn't use who would normally have been the primary borrower because of the stock options, right? So here we got the wife became the borrower, no job, no income required, nice huge home. It was like a $1.4 million loan, no problem. Loan closed in like 30 days. Very excited. Now, normally you get that loan, you go, what do I do? I don't have any options for you. Your income in no way possible. But with the CDFI loan, as long as it's a primary or a second home, no need to verify income, no need to verify employment. You just need to have very good credit and reserves.
So like what are some other examples though? So like a retiree, right, that maybe
Right,
not quite have enough on their social security income, but maybe not quite have enough for an asset depletion, but could still
right.
use this
Or
program.
or an executive or somebody relocating. They know they're going to have that job. The job's lined up, but it's not yet in the offer letter acceptance stage. They don't want to rush into accepting a job just to qualify for the home, but they have the money, they have the excellent credit, they want to relocate, and then they want to be able to negotiate the can. That's another perfect example of a really good use for this program. Or our crypto owners, plenty of assets, great credit, just not declaring any income. But I mean, this is not the program really to put someone in that cannot make the payment, right? It's not just about putting your whole nest egg on the line and that you save forever and have good credit, and then you cannot make the payment, because obviously you're looking at rates that are a little bit on the high side. um, so as good consultants, we would definitely want to make sure that we don't put our borrowers in a bind. But there's many different scenarios, like especially all of these self-employed individuals that may or cash-based individuals, they're trading, they're getting a lot of cash, or trading in different things, that like trading in Bitcoin, right? So how do you put your income but you have a lot of money? So you just get this loan. It's perfect for them, fits right into their operations. They can close without having to worry about, oh, okay, now I got to worry about filing tax returns just so I can qualify for the home, right? It's a lot better off paying a little bit higher rate and handling your financial matters in the manner most effective for your business model, And that's why we provide solutions to their lending needs. This is one of the tools that we have, along with all of the other 5,000 tools that we have to offer borrowers solutions to their lending needs.
Beautiful. I think you can wrap it up there then, Kyle.
All right. Yeah, I don't see any questions. Appreciate that. Definitely a great, unique program. And as Jose said, another tool in our tool belt, right? Along with our 5,000 other tools that we have here at the Mortgage Calculator. If you want to connect with one of our loan officers, you can visit us at themortgagecalculator.com. We have 350 licensed loan officers all across the country. We can do primary and secondary homes in 24 states, and then we can do business purpose loans in another 20 states, so 44 states total. So visit us at themortgagecalculator.com for more info. Remember, we do this show 11 a.m. Eastern every weekday, where we go through the live rates and do a deep dive into a different subject. So we'll be back tomorrow with a new subject. Thank you, everyone, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.